What is up, everybody? It is Rob here coming at you with the Thursday nightly watch list. It's been an incredible week, right? We've been blessed with so much opportunity that we've been taking advantage. And now another awesome day in the markets. And actually, I'm recording this watch list, right, 3 minutes before Apple earnings comes out, okay? But let's get into the watch list, and then when Apple reports earnings, we're going to get into what is going on with that at the moment, okay? So, first things I have for you guys here is, look, the market ended lower, all right? As you can see, S&P 500 ended down over 1%, QQQ, NASDAQ 1.5%, and then the Dow was down about 1/3%, okay? So, you might be asking me here, Rob, well, why did the market end down today? And the reason for that is because it's earnings season. And what we saw yesterday, right, was Meta earnings that did not report as well because they had this huge one-time expense, which sent the stock down. And at the same time, Microsoft as well, right? They had good numbers, but a lot of these companies are spending a lot on AI, right? A lot of capital expenditures, a lot of spending money towards AI. So, right, the market did kind of salt those names because, well, if you don't get a good return on investment on this AI investments, well, right, that's not going to be good. So there was that, right, profit taken of these earnings. And then the market also wanted to take some profits heading into the Apple and Amazon earnings, right? Amazon numbers already came out. I will talk to you guys about that. And then we're just about to get Apple. And then also, right, yesterday, Powell did come out and kind of put pressure on that December rate cut. I mean, the odds of the December rate cut yesterday were 90%. And then after his speech, they dropped to 70% because he said, hey, a December cut's not necessarily guaranteed. Well, guys, I mean, it's more likely is going to happen unless something in the economy, crazy happens. But, like I was telling you yesterday on the watch list, that he was doing it just to gain back some, movability and, Fed independence. Like, hey, we don't make decisions based on what the market wants, but, we're the Fed, we make the decisions. So that's what moved the whole market today, right? As you can see, SPY, QQQ, okay, was down. And then you look at the Dow, right? Big move up this morning. And then you had some profit taken coming in at the end of the day. But right now, what we're most important for is Apple earnings. So what we're going to do is we're going to watch it live right now. So let me actually pull a chart for Apple. Let me try to get it. All right, let's see if we got the numbers. Look, the stock's moving down right now. First reaction might not be it, but let's see. Let me get you guys the numbers. Come on. What is happening, Mr. Apple here? Let's pull this chart out so you guys can see. Historical prices. Look, the high was at 274. Okay. Let's keep this chart pulled out. Now, Apple was supposed to report earnings at 4:30. So the numbers look like, okay, I got them for you right now. All right, Q4 EPS came in at 1.85. The estimate was $1.77. Okay, the stock's selling off based on China revenue. Okay, right here we got China revenue was 14.5 billion. The estimate was 16.5. They missed on their China revenue. America's revenue 44 billion versus 44 billion estimate. Okay, so there you go. Okay, that's what people are worried about is the China revenue. Now I'm trying to see if I can get more headlines on this for you. Looks like we have, all right, full in-line revenue for the quarter. They came in at 102.5, estimate 102. So they did beat overall top line EPS and revenue. Let's look at services revenue, 28.75 billion versus 28.18 billion estimate. Yeah, big hit coming down on the stock because of the China revenue. Now we did get earlier in the month, right? We did see that the iPhone 17 Air sold out in China, but some of the other models were not going strong. So we just got the Apple earnings live. We're going to see how this actually plays out as more headlines come in. but the stock's down about 1.5% after hours. Right now we're getting a move. Let's see. Apple's still facing supply constraints on iPhone 17 and 16 models. Okay. So I get anything else for you? But no, I mean, they beat revenue and their EPS estimate for the quarter. iPhone revenue 49 billion versus 50 point. Okay, so they missed on the iPhone revenue. It was a slight miss. iPad revenue came into the estimates in line. Services revenue came in line. Yeah. I mean, that is big thing. Greater China revenue 14.49 versus 16.24 billion estimate. Weakness tied to iPhone delays. Let's see. iPhone Air launch delay in China drove Q4 regional softness. Supply constraints hit select iPhone 16, 17 models. Here's their guidance outlook. Total revenue is estimated plus 10% to 12% year over year. Okay, versus 6.6% estimate. Okay, that's interesting. They upgraded their total revenue estimate for the year. Okay. iPhone revenue double-digit growth expected versus 9.8 estimate. Okay, so basically what their Apple's saying right now is, hey guys, we're actually getting some big demand on our new iPhone model, and we see, revenue growing more than expected, but the market is freaking out over this China demand. So there you go. That is the Apple earnings. So I'm going to keep this up for us, probably do the watch list so you guys can stay tuned into that. But for right now, let's keep it going. So I just got done with the market recap, what moved the market today. And we did have a lot of China headlines come out this morning because Trump and President Xi did finish their meeting. So this is what I have for you here. If you look at the screen, China agreed to continue exports on rare earth, critical minerals, and then China did agree to halt export controls for 1 year. They did agree to suspend some shipping curbs against the United States for a year. The U.S. to suspend 50% entity list export controls for a year. And then the U.S. extends the suspension of 24% reciprocal tariff for 1 year. So it was a good meeting, right? And China did start to buy U.S. soybeans again. So in all, the meeting did come out good. And they did kind of have a little trade deal there. So all in all, that was good for the market. And then what I have for you here is just overall, right, headline on the market. U.S. stock buying spree surges, right? Investors pour a massive $4.7 billion into United States equities. The biggest weekly inflow since August, signaling risk on sentiment return, which I've been warning you guys about in the past watch list because, right, you've been seeing the put to call ratio, right? Calls are basically doubling the puts. And then at the same time, right, China trade deal and good earnings coming out of tech. So, right, big risk on. NVIDIA had down 0.5% pre-market because Trump says NVIDIA chips was not a discussion with President Xi. As I told you guys before, NVIDIA does not sell any of their AI chips to China, 0% market. So people were expecting, hey, maybe that's a conversation for that meeting. Trump confirmed that was not a discussion. So market did sell off a little bit because NVIDIA will not be going into China selling chips. And then interestingly enough, look, rare earth stocks rallied as China delays their export controls. One could have thought here, well, what the heck? I thought if Trump and China get a trade deal and China's going to export, critical minerals and all that, well, wouldn't these stocks go down? Because a lot of these are, U.S. government stakes, trying to get their own, supply of these minerals rather than just buying from China. Well, look, this is only a year delay, and at the end of the day, look, China's still going to hold this over our head, and we do not want to be completely dependent on China. So right now, the government is still looking at stakes in these critical minerals. Now, it might not be too much of a hot topic right now, but look, still be looking at these names because I do guarantee you that the Trump administration will still be trying to take control of some of these companies. The next thing I have for you here revolves around Novo Nordisk and Pfizer. So Pfizer was going to try to acquire this company, right? And basically it's around obesity, weight loss, right? Bio company, right? And Novo came in and actually said, hey, we're going to make a higher bid for this obesity startup and they were up over 20% pre-market. And just goes to show you, look, Novo Nordisk is full on in acquisition mode, and they're power to the house here, right, with their weight loss business. And interesting enough, Pfizer was down on this because they do not really have a big presence. Why am I saying that? No, presence in the weight loss industry, right? It's the big movers are Eli Lilly and Novo Nordisk. So Pfizer did come out today and say, hey, we're actually going to sue you guys. I can't believe you offered more money to try to buy out this company. Well, we'll see where that develops, but there's a headline for you. Eli Lilly, right, reported earnings. They absolutely killed it. Okay, they're up over 4% pre-market. And Mounjaro, right, powered Eli Lilly to, double-digit growth, sales growth. So what I'm going to do for you here in the bottom left is pull up Lilly's chart for you. So look, you can see just today, right, they were closed up 3.81%, okay? And they had their earnings, and the stock has been doing great, okay, because of the weight loss business. So that is what I have for you there. Also, Chipotle. Alrighty, guys. This stock got absolutely hammered, okay, after their earnings report. And that is what I'm going to share with you right now. Let me pull this chart out. So look, as you can see, look, before the earnings, the stock was trading around $40. And, it tanked. It opened up today at $31, almost down over 20%. Now, what I did yesterday was for the long-term portfolio, right, after hours, I did get into Chipotle at $35, okay? I like that price, like that level. It's a new entry to the portfolio, right, completely new. We got our starter position in this at $35. And I couldn't believe it got so bloody and opened up at 31, but that actually presented a great trade opportunity this morning, which I'm going to talk to you guys at the end of the watch list because we made a killer trade. And big news, right? CMG, new long-term portfolio addition. But basically what happened was the stock went down a bunch after their earnings because the company did lower their sales guidance, revenue guidance, and people have been saying there's been less, or the data has been showing there's been less foot traffic in Chipotle. But nonetheless, it's going to be here in 5 to 10 years. I'm still going to be eating Chipotle, right? It is at multi-year lows, and great time, right? I thought to buy the stock, so we added along to our portfolio. Okay. Next thing I have for you here. Look at this, right? The Fed's cutting rates. So we just saw here mortgage rates in the U.S. dropped to an average of 6.17%, fallen for the 4th week, right? So keep your eye on the 10-year, and that kind of tells you the mortgage rates. So as you take the 10-year treasury, add 2% to it, and that's basically your mortgage rates. And right, for home buyers, a lot of people are eyeing this up, and rates as well, just in general. Also, Meta shares closed lower by 11% for their worst drop in 3 years, okay? Now, this was because of that big one-time, like $15 billion charge, right? But at the same time, okay, they're doing big capital expenditures in AI, right? That has to live up to the hype. And they did take a big loss, a couple $1 billion loss on their Reality Labs, right? With the stuff they're trying to do in VR and all that jazz. So the stock, right, did take a big drop, and worst one-day drop in 3 years. So look, if you pull the stock out, right, here's where we're at relatively to historical price performance. So, this was one of those stocks, that was just a crazy, absolutely, great COVID buy that you could have got. Look at this. During 2022 and even COVID, like if you go back down to COVID, like let's look at 2020. The low was $137. And then in 2022, during the rate hike fiasco, it went all the way down to $88. And then look, a high of 796. So there you go. There's your historical price performance on Meta and earnings. So there's that. Keep your eye on Meta. Big drop, okay? Also, news out of Netflix today. Look at this, guys. Look, move up after hours, okay, because Netflix just announced a 10-for-1 stock split, okay? So basically what that means is for every current share, there's going to be 10 more. So let's just round this number up here to 1,100. Well, after the stock split, Netflix will be trading at $110 for every share. Okay, so if you own any shares right now, well, you're going to have actually 10 more. Now, this doesn't actually affect the company or whatever, like, or the valuation, right? You're just, people are like, one day they're going to open up their stock watching platform. They're like, oh my God, Netflix is at $110. It was just at 1,100. Don't freak out. It's a stock split. So the market cap will stay the same. All they're going to do is add 10x the amount of shares and give everyone 10x. So, you're not going to lose money at all or whatever based on a stock split. But the stocks do go up on this news because it makes the stock cheaper for retail investors. Because the average person says, hey, I want to own a share of Netflix. Well, they're not really going to be able to do that at $1,100. So 10 for 1 split brings it down to 110. And if more people can buy the stock, well, that increases demand. Price goes up. So there is your Netflix news. And then Amazon killed it. Amazon killed it on their earnings, up over 10%. And I have the numbers for you here. So they did post strong Q3 revenue at $180 billion and EPS of $1.95, topping all the estimates, right? And what's the big thing everybody looks at, right? It's not just, okay, well, how much are people buying on Amazon? No, it's their Amazon Web Services. That's, their big revenue driver. And that actually, or their big growth driver, hits $33 billion and had 20% growth. And they actually guided their Q4 sales to $206 billion to $213 billion, which is a strong quarter because Q4 is the holiday season. So you see a lot of spending. So people love to watch this number. So they killed it. Look at the EPS estimate, 158 came in at 195, $3 billion beat on sales, and Amazon Web Services beat the estimate. Killed it on their earnings, and that's exactly why you see the stock up after hours, up over 11%, going to, look, all-time highs, right? Netflix was at $242 back in February of this year, and right after hours, you're seeing it skyrocket up to all-time highs. They killed it. And look at this, Apple continuing to move up higher on the earnings, now up over 2.5% after hours. Let me see if I can get any new headlines for you guys. Let's see if anything new came out that's maybe moving this. No, I mean, the market is just liking the numbers. Like I told you guys, they did guide higher for revenue growth, and they're saying that the new iPhone sales are doing good. Initially, when the numbers came out, people did panic over those China numbers. So looks like, we're going to have to wait for that conference call to really see, what the market here wants to do heading into tomorrow. But there you go. That is the move for Apple as of right now. Let's get back into it. So, plays. The plays. So, okay, guys, like I told you, we did add Chipotle to our long-term portfolio. And, right, we did this after hours, after the earnings. I told you guys, I said, Chipotle is one of these names we wanted to add to long-term portfolio. And the earnings might just present us an entry into this name. And that's exactly what happened. So we killed it on this. I told you guys on the watch list yesterday to keep a big eye for this move. And look, I added it at $35 because this was a huge, support area, for the stock. And I mean, it just got absolutely knifed through it. And what you're going to see here is it went all the way down to 31. So you saw this big panic sell and profit taken in the morning. So what I decided to do was play it today and go, okay, well, Chipotle stock has never gone down this much in its history, even more when they had the E. coli crisis. And I said, okay, well, if anyone's short of this, they're definitely going to be taking profits. You're going to have more dip buyers. I mean, I stepped in the market at 35. You're looking at 31 at open. So, short sellers covering, dip buyers coming in, people profit taking any puts they bought, anything of the lines. So it's like, you are going to get a move up this morning. And that's exactly what happened. So we had this big green shoot up, and it actually continued a little bit of a rally all the way, around to noon. And then you did see some of that morning, move up, start to get profit taken. So I want to talk a little bit about the trades that we did. So what I did was I actually went for 3 different strikes because, right, with this move up, I wanted to play it a little safer. So rather than just going for, say, the 33 calls or the 35s, I kind of did a little bit of a spread. I kind of straddled out my risk. So I grabbed the 33 calls, okay, that expire on Friday, the 34 calls that expire on Friday, and the 35s. Now these 35s are more of a lotto play because I was like, okay, well, I entered the market long-term portfolio at 35, and I mean, I know it buttered through that. So, I mean, the next support resistance line was 33. So I was like, okay, well, we're going to go bigger on the 33 calls, right, for a morning, pump. And then buy the next ones kind of as like a lotto or, get cheap premiums. So when the price starts to go up in the morning, those out of the monies will get jacked up. And that's exactly what happened. I mean, we sold the 33 calls and the 34 calls for up, over 200%. And the 35 calls went over 150%. Now, I wasn't too confident for these 35s. So I sold one of them, right, to get my money back. And I'm let in the rest, ride for a gap up tomorrow morning because, for all we know, right, I mean, look, Apple just reported great earnings. And now Chipotle tomorrow morning, I mean, it could gap up tomorrow. So, I mean, we did buy these contracts super cheap in the morning, these 35 calls, because we got them at the open when the stock opened, right at like 31. So, I mean, we bought them at 5 cents. And I mean, they ran all the way up to like 25 cents during the day. But, we just sold one to get our initial investment back. And, we're going to let the rest ride to see, hey, maybe we can get a little crazy and move in Chipotle. I mean, it closed down today at 18%. And who knows, maybe coming to Friday, we get more dip buyers and short sellers covering over the weekend. And we'll see. So, guys, that is everything I have you for tonight's watch list. There's been this week has presented so much opportunity with the earnings, big tech earnings, the China meeting. And, this is what we live for here. We love volatility because we can trade it. We love watching the earnings, right? Presents so much opportunity. And guys, we're killing it today. We did a great job on the Chipotle play this morning. And we're going to keep doing great because we're going to stay locked in heading into the end of the year. So that's what I have for you guys. So peace out.